Today we're looking at Cool Trade, and I'm going to be going over refining a strategy. So today I left my open positions, or I left my auto trader open so you can see the positions I was in, and I'm going to go through the trader real quick and explain just where I could make little improvements here. So you see this is a $49,313 account. It's a day trading strategy. It initially started at $25,000. And it's only been running about 3 months. So far, so good. But upon closer analysis, I've realized that the volume in some of the stocks that I've traded has been fairly low, and the likelihood of me getting out of positions at those same prices is not that likely. So slight adjustments would have to be made for this to be 100% accurate. So you see today it is up $1,281, and it is a day trading account, so it's closing all these positions each and every day. Being a day trading account, it can use up to a 4-to-1 margin. So on a good day, it can make $5, $6, $7,000 sometimes. On a bad day, the same thing could happen. So it's potentially a very volatile strategy. There could be very large drawdowns. I've only had a big drawdown day like that once, where it's been even close to that, and actually it was more like 5,000. Anyways, though, the big problem I noticed is when you trade these small or inexpensive stocks, anything under like $4 or so, it's trading very large lots right here, 7,500. In this case, no big deal. This is a stock with heavy volume, 11 million plus. However, if it's trading a stock like this, where there's only 583,000 shares traded per day, you might not get out at the price that you execute your order at. If there's no buyers on the other side of your trade, you're going to get a lower price on average, because you'll place that trade, you'll sell those shares to whoever's willing to buy at that price. But since it places your trade as a market order, it's gonna unload those on the market, and whoever has orders out there to purchase shares at lower prices will ultimately take the other side of your trade, and it's gonna cause slippage ultimately, and your average gain is going to be lower. So some adjustments I made to this strategy after analyzing things: I'm only trading stocks that on average trade at least 500,000 shares a day. As I said, this one did this day, but it doesn't necessarily always. You see, with this strategy, it trades the top moving stocks of the day, and typically the top movers, whether they are always high volume stocks or not, their volume's way up on the days that they're the top mover. There's there's a reason they're moving. There's a lot of people buying and selling. So making an adjustment like that, where the volume's high enough for you to be able to get out of those positions, the price you're trying to execute that trade, is essential, and will ultimately help you to take more money off the table and expose you to less risk, just by making a small change like that, where you increase the volume size. So to do that, you just go into the strategy wizard, you add a new rule that says you only will buy stocks that have a volume greater than, in this case I have it set for 500,000, but maybe you want it to be 1,000,000 just to be sure. And then also, you might not want to buy too many shares of inexpensive stocks, even though you're trying to spread your risk evenly across these positions. You might want to be careful with those $2 to $4 type stocks, because small move, a few cents here and there is a much bigger, will play a much bigger effect on your trades than it would when the share price is $20 or greater. So just a few things to think about, and I hope you guys found that informative. So if you want to learn anything else about cool trade or automated trading, check out autostocktrading.com. Thank you.